Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, the 21st of May, and we are now in the last hour of the market. As many of you know, I prefer to trade during the last hour, to place my trades during the last hour of the market because I feel like the closing price is the most valid price of the day and therefore the best price to make my entry and exit decisions on the day. So the plan for today is that we're going to go ahead and run the legal disclaimer. After we're done with that, we're going to go through, take a look at my current positions, see when I got in them, why I got in them, and how I'm going to manage the trades going forward. And then after that, we are going to go through my watch list, and we're going to go down through each particular stock, and we're going to analyze the charts and the technicals, the support and the resistance, and see if there's any good entries that we might be found today. And then after the market closes, I will be happy to take any questions that you have about the day's activity, and or if you would like me to look at possibly a stock that you're in, I'm happy to do that. So anyway, all right, so first off, let's go ahead and run the US legal required disclaimer, get that out of the way, and I will be back in 40 seconds.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, good. We got that out of the way. So just quickly, let's take a look at the markets. The Dow Jones is up 177 points, the NASDAQ is up 85 points, and the S&P is up 24 points. So the NASDAQ, percentage-wise, is the clear winner today. Let's go ahead. Let me check real quick, make sure everybody's on board. Hey, Mount Doji, how's it going? Snap is having a great day. Yeah, I looked at that yesterday when you wrote me, and I thought it looked pretty good. So, you know, even though it looked good yesterday, certainly doesn't mean that it's going to go up today. You never know that. But anyway, at least it's having a good day. Glad to see that. All right, let's take a look at my current positions and see why I got in them and what we're going to do with them going forward. All right. All right, so DDM, this is the double leveraged Dow Industrial ETF. The reason I bought it is, you know, I always look at the 200-day moving average and see what the price action is around the 200-day moving average. I did buy this on the 15th of May when we had two closing days below the 200-day moving average, and then it moved right back up. And then closed above the 200-day on a closing basis. So I did hit two profit targets there. I did not hit any profit targets the next day, did not hit any profit the next day. But as you can see, I did hit one profit target here today. And if you'd like to learn a little bit more about profit targets and how and why I use them, I did a video over the weekend where I talked about profit targets and how I use them. And yesterday I posted it in the chat, but what I realized is that I posted the wrong link. So I'm going to go ahead and just post that link again. right there. So that should be the right link. So if you're interested in watching that video, I go into detail about how I structure the profit targets, why I'm getting out, how much I'm getting out. You know, it's a math formula that tells me exactly. So, hey, Ramble Ron took the day off. Good for you, bud. That's awesome. Glad to have you here. Thank you for coming. So anyway, I did hit 2 profit targets here. I did hit 1 profit target here today. This is a counter trend trade, meaning that I don't expect this to go all the way back up. When I took this, you know, my actual profit target was here, but the 50 RSI was here. So based upon the formula that I use for scaling out of my positions, when I'm in a counter trend trade, I get out percentage wise at each profit target more than if it's a trend trade. For example, I believe like today I got out of 22%. This was probably 22%. And I think I hit 2 of them, so maybe 44. So I'm close to 65, 70% out of this position. And the reason that I get out of more shares when in a counter trend rally is because it's a counter trend rally. Chances are it's going to come back down more than it's going to go up. Like when I take a trend trade, I may get out of 10% at each profit target, but in a counter trend type of rally, I will almost get out of at least double the amount because I don't want to be as patient with it. So anyway, yeah, so we're doing well today. We did hit 1 profit target. Here's the next profit target up here at 46.48. Who knows if that's going to hit today. This blue line here is the 50 RSI. So when you have a deep dip buy, and then you get up to the 50 RSI, that 50 RSI acts as resistance above you. As you can see here, we were down here at the low 30s. We came back up, and now we're bumping up. Not quite yet. We're at 46.48, but you know, that 50 RSI is going to be resistance above. So in the coming days, if we do go up to the 50 and reject it, I will just go ahead and lock in all my profits on the trade. If we had a big day and it closed above the 50, well, I will keep it and I will continue to phase out, but then I will use the 50 day as my trailing stop. So as stocks move in your favor, you know, I always like to phase out when the market's giving me something, but I also like to trail up the stop from the downside as the stock starts moving up. So what do we do with DDM from here? It's either going to hit and reject the 50, in which point we'll get out. It will move up towards the 50, in which case we'll get out, stay in, or it will come back. At this point, because we're so extended up away here, I'll have to see. Honestly, probably at this point, if we got back down to the my entry point, I would probably just go ahead and use that as my trailing stop at this point, because we only have about 35% of the position left because we phased out. But anyway, it's been a nice profitable trade. So we'll let the chart tell us what to do going forward. David Gordon Russell, hey, how you do, David? Nice to see you. Thanks for stopping by. I appreciate it. All right, so let's look at our next stock. Okay, this is Google. We bought Google here yesterday on the 20th of May, and why did we buy it? Well, back on the 15th, we had this big, strong, large momentum bar that came up. It did go up and test the 50 RSI and fail, like it often does. Yesterday, it came back down. It did hold the 200-day moving average. It did go below it intraday, but then it held above it. You can see we bought right here 1145.98. It held above it, and in addition to that, it also held the halfway of this large upward moving bar. A lot of times when you have these large upward moving bars like this, you will have some kind of inherent support at the 50% mark of that bar. So we had 2 signals that came together. 1, it held the 50% of this bar. 2, it tested the 200-day moving average and closed above. So if it would have even closed 1 penny below the 200-day today, I would have gotten out, but luckily it's gone our way. You can see I did hit one profit target here at 1157.20, so it's below that now. So I was able to exit about 22%, because again, this is a counter trend trade. This is not a trend trade. So I got out of about 20, I think it was 22 or 23% here, because this is a counter trend trade. And when the market gives me some profit into counter trend move, I'm more likely to take off larger percentage of the shares compared to if it was a nice uptrend, where I would say, okay, instead of getting out of 20% here, I'll only get out of 10%, giving myself more profit potential as it moves up. Because in a trend trade, it's more likely to move up. In a counter trend trade, it's not as likely to move up. So anyway, we will keep this here. You can see we got almost the high of the day. I will keep this until, one, it either starts moving up, test the 50-day moving average. If it tests the 50-day moving average, the 50 RSI, and fails, I will just go ahead and lock in the profits. If it tests the 50 RSI, keeps moving up and holds on a closing basis, I will keep it. And or if it moves back below, closes even 1 penny under the 200-day moving average, then I will exit. But even if that happens, I was able to take 23% on my scale out. So again, on this one, we'll just let the market and the charts tell us and dictate what we're going to do with this trade. Better than having opinions, better than thinking, I think it's going down. Well, why do you think it's going down? I mean, really, you don't know, right? I mean, no one knows. The best indicator you can use, in my opinion, are the technicals, because that's what the market is telling you. You know, do what the market wants to do. Don't fight it. You know, just let the technicals dictate what you're going to do. Okay, silver. We bought silver yesterday, and why did we buy it? Looks like a downtrend. It is a downtrend. So back here on the 17th of May, we did go underneath, no, it was yesterday, excuse me. Yesterday we did go under the 30 RSI intraday, and then we closed back above it. And not only did we close back above the 30, but we also closed back above the third ATR channel. So those are two indicators that told me, okay, it looks like we found a short-term bottom here. Let's go in and see if it is. And because it's under the 200-day, I only took a half a position. You know, when you come down and the 30 RSI is underneath you, there are buyers down there. They are just waiting at the 30 to do exactly what we did. Now, if those buyers can hold up the price, then we may have a 2 or 3 or 4 day rally to the upside, but then it's very likely we might come back down. But this is a snapback trade. This is like taking a rubber band, pulling it really tight and letting go, and then it snaps back. And that's all this is. This is a mean reversion trade. We're just trying to get back to the mean because we've pulled so far away from it. Now, if you pull a rubber band and pull it too hard, sometimes it doesn't snap back, it just breaks. And this could just break to the downside. So trailing stop here is a close below a 30 RSI. Right now we're a 31.11, so we're pretty close. So if we're wrong, we should be wrong small. And if we're right, you know, the 50 RSI is all the way up here. So the risk, you know, if we're down here, that may be our risk, but our reward is greater. And it's always important that you have a greater reward potential than your risk potential with your trading. It's really important. It's the most important thing to me, is having a good risk to reward ratio. As long as the price, as long as the RSI stays above a 30, I will be staying in this trade. Currently we're just a little underwater on it, but we'll wait for the 30 to the downside. If it moves up, test the 50, rejects it, then that's where we'll lock in our profits. All right, here's the SPY. All right, so as many of you know, I buy the SPY each night at the close and I sell it each morning on the open. And why do I do that? It's based upon this study. Since 1993, if you would have bought the SPY on the open in the morning and sold it at the close in the afternoon each day, you would have lost 5.2% of your capital. But if you did the opposite and you bought on the close and then you sold first thing in the morning on the opening, you would have returned 568%, meaning that more than all performance came in after hours trading. Those are traders in the overnight session and the pre-market bidding up the prices. So, over time, you can see this has been a profitable approach. There are times where it does have significant drawdowns. So, if you started here, I mean, this drawdown's no fun, but at least, you're certainly still in the money overall. But if you would have started this here, you would have thought this is the worst approach ever, right? But you really have to take a long-term approach with this. Since I've been using it, I'm definitely net positive by using this approach. I have had a drawdown in the last 2 weeks when the market's been crazy to the downside, but like I said, I'm taking a long view on this and letting the past performance give me an edge going forward. Now, who knows? It may never work again. You don't know that, but it's better to base something upon good past performance than nothing, right? So, okay. So that being said, I did buy it here yesterday at 284.18 at the close of the market, and then I sold it when it gapped up first thing this morning. So that was nice. It's a little higher now, but not that much. So anyway, this was a nice profitable trade. I will also be buying that today, this afternoon at the close of the market. All right, Visa. So this is a short position. I think this is the only short position I've ever had on this podcast. But why did I short this? So here's why. You see how we had this previous high over here, then we went down. See how we came back up when we tested that previous high, and it tested it intraday, but then closed below at the end of the day. So, that is what's called the turtle soup. If any of you know Linda Raschke, she's one of the most famous, probably the most famous female trader in the entire world, I would say. This is one of her setups. When you have a test of the previous high, it tests it, closes below it. So that by itself shows us, it's a double top type of formation. But in addition to that, when you look at the RSI, up here. Look at the price up here. You see how high the RSI was here? And then here we actually go higher than that previous high, but you see how the RSI was much lower. So that's an RSI divergence, which is a bearish signal. And then we also have something called a ATR divergence. If you look at the high up here, do you see how we got to about 3.5 ATRs? Here's 1, 2, 3, about 3.5. And then again, you have another divergence over here. When you challenge that high, go a little higher. You see when we got to this high, we were like 1 3/4 or 1 7/8 ATR compared to 3.5. So you have an ATR divergence, you have an RSI divergence. So that is why I took the trade. I shorted it here. I was able to take about 22% of the position off yesterday with one of my profit targets. Haven't hit a profit target today, but took about 22%. And the reason it's 22% is because this is a counter trend trade, right? We're shorting in an uptrend. So when I want to take my profits a little quicker, and I want to take a larger percentage of my shares, because odds are, it's more likely to go up than down. So you want to be quick and take a larger percentage of your position off when you get it. It did gap up open today, but it's actually looks like it's below the open, which is good for us because we're short. And the other thing too is, the market is up the Dow's up 184 points, and which is 0.72%, and Visa is only up 0.17. So it has negative relative strength, meaning that in the relative sense, it is weaker than what the market is up in general. So if you're short, that's kind of what you want to see, right? You don't want to see Visa up 3% when the market's up 1%, because that is positive relative strength. So this is negative relative strength, which is what we want. So here, my profit targets on the day, here, here, and here. Doesn't look like it's going to get to any of those. My stop will be a close back above the previous high. So I'll try to keep that loss small if it goes back up. And then my initial profit target is a 50 RSI to the downside, because we know that when the price is above 50 and comes back down to 50, there will be some inherent support there. So if I'm short, that's about where I want to cover. So hope that makes sense. But if it does go up move against us in the coming days, at least we did take a profit of 22% down here yesterday. So that helps mitigate our loss if it does turn against us. So, okay, so that's Visa. And I believe that is all we have. So quickly, DDM close below, or if I get back to my entry point, that will be my stop. Otherwise, my target is a 50 RSI. If it rejects the 50, I'll lock in the profit. If it keeps going above, I'll keep it. Google, stop to the downside is a close back below the 200-day moving average. My profit target is a 50 RSI. If it gets up to the 50 and rejects it, I will lock in profits. If it keeps going, I will keep it. SLV, target is a 50 RSI up here. My stop to the downside would be a close below the 30. The SPY will be buying that again today. And then Visa, profit targets here. If it comes back down to the 50, closes below the 50, I will keep it. If it goes below the 50, RSI closes back above, that will be my signal to lock in profits, and my stop to the upside will be a close over that previous high right there. So those are our positions. That's what we're doing. We're having a nice green day today, which is always nice. We've had 3 green days in a row, which I'm kind of proud of, because last couple days the market's been down pretty significantly. So yeah, we've had 3 nice winning days in a row. All right, so let's go ahead and just give me 1 second. Dr. Jorgensen says, when he give you shall take, when he giveth you shall take, especially if a lady giveth. Yep. Yeah, if the market gods give you some profit, it's always a policy of mine to take some. And don't get greedy and wait for only one spot above you. Take it, phase out as it gives it to you. Frederick, hey Greg, thanks for your reply on my message. Yep, you bet. I hope that helps. Excuse me. All right, well, let's take a look and see if there's anything interesting today for the end of the market. Yeah. All right. So Apple is having a good day today, up 3.89. This is a good example of don't get caught up in a big up day move thinking that it's the bottom. Be objective, stand back, look at it. And when I look at Apple, yeah, it's having a nice day, but look, we still have the 200-day moving average above us. We made a lower low just the day before. Where would I be interested in Apple? At the very least, I would have to have a close back above the 200-day moving average. That would also trigger a fractal. Well, I guess technically, if we can get back above here, that will trigger a fractal to the upside, as well as a close back above the 200-day moving average. So that would be a good confluence of indicators. Although if we get up there, we might be dealing with the 50 RSI. So my point here is there's a lot of there's a lot of overhead supply and resistance going on here. So this may just be a one-day wonder. I don't know. Where I would really like to buy Apple would be if it gets down to the 30 RSI, and that is about right here, somewhere in this range. So I feel more comfortable in this particular setup if the market goes down than up, just because of all this resistance above us. So if we can get down into this area right about here, we'll have a confluence of the of a 30 RSI. I believe we'll have a confluence of the -1 ATR channel on the weekly. You know, it's always important to look at stocks in multiple time frames and see if you're finding some support on of one price on multiple time frames. But to the upside, I would have to see it minimum close above the 200-day moving average. To the downside, getting near that 30 RSI level. So nothing on Apple today. Amazon's kind of been all over. You can see it has held the 50 moving average pretty well. It did rally and spike off of that, but then it gave it all back. For me, either moving back up above this fractal here to the upside, or a close below, and ideally with the V1, V2, and then close back above the 50s to give me confirmation that the market has tried to go under the 50-day moving average and it has rejected. I would here, you know, we did test it intraday, but I feel better if we got a close below and then a move back above. So nothing on Amazon. Boeing. So okay, so here we make this lower low, we rally, we come down one day, which, so if we close back above the 200-day, technically you do have a higher low underneath you. One day higher lows concern me a little bit. I like when I have 1 or 2 or 3 days down and then back up. But if this did close above the 200-day moving average today, I would consider it. And I would take a full position because it's over the 200 days. So right now we're the 359.70 is the 200-day moving average. So if it closes above 359.70, I would consider taking a long position with this. And then if I did get long, I would use the 200-day as my stop, you know, very close below me. So we'll keep an eye on Alibaba. I'm sorry, on Boeing. Alibaba. Yesterday we were considering buying this because it was under 30, but it didn't close back above 30. If it had closed back above 30, I would have gone long this, although if I had bought it, it would concern me about keeping it because we immediately tested that 200-day and failed. So nothing on Alibaba today. We'll have to wait and see how this plays out. You know, even if it does keep moving up, most likely it will move up to about here and then move back down. Most likely, obviously, I don't know for sure. But so anyway, nothing on Alibaba today, but I don't like that it immediately tested that 200-day and failed. Caterpillar, yesterday it was below 30, did not close back above 30, did move up nicely today. We're coming from a lower low, so you know, if I were in this trade, my profit target would be somewhere up in this range, probably in the 50 RSI range is the resistance that it will have above it. But you know, it's not bad, but when you look at this on the weekly, you know, it hasn't really tested any support. I mean, it is good that it went under 30 to over 30 and also took out this, you know, it went into this new range here and now it's back into the old range. So that is important, but I just don't like it. I feel like we might get a couple days bounce and then it might fail, but who knows? Canopy growth. You know, canopy growth is interesting here, folks. If we look at canopy growth on the weekly, you can see for the last couple weeks we have, well, geez, we've tested this 20-week moving average multiple times, has not been able to close underneath. Yesterday we did go down below the 100-day moving average, and now we close back above. And the other thing that happened is that we have a nice V2. So here's day 1, day 2, day 3, day 2, washes out the low of day 1. Day 3 has to close above the close of day 1, that's what it's doing. And it's also looks like it's going to close above the 5-day moving average. So this is a tough one. And the reason it's tough, I mean, the risk to reward ratio is good. There's no doubt. But we are at a 46.22 RSI. And, you know, it's likely that we're going to get some resistance here at 50. It's a tough one. I mean, it does look pretty good. Close below, upward moving 100-day moving average, close back, close below, close back above, V2 entry. It's not bad. So I'm gonna mark this one, and we'll keep this one till the end of the day. Cisco had that big gap up on earnings and held it. It's a 60.72, but you know, it doesn't really give me a good risk reward ratio here, because it's not really defined where my stops would be. You know, 70 to the upside, where would my stop be? Maybe the 5-day, but I mean, more likely it's going to go up than down, but I'm not going to take it. DDM, we have this, we talked about this. So be nice if we get up there to that second profit target, right? And you can see it's getting very close to the 50 RSI, which is our profit target. Looks like a little weed would be good today. That's right. Yep. So yeah, that's why I marked canopy growth. It does look pretty good, Bruce. Etsy. Etsy does not look bad. We made a lower low. We rallied up to the 50. We came back down. We moved back up. We triggered a fractal here. We are above 50. MACD is getting very close to crossing. So that one looks fairly good. Let's take a look at this on the weekly chart and see if there's anything there. Well, here you have a V1 on the weekly up against the day 1's bar. We've tested this 20-day moving average. It looks pretty strong. Yeah, it's not bad. It's not bad. Facebook, I did buy Facebook here when we closed above all the moving averages. I did have to exit this for a loss yesterday when we closed below halfway of this big bar that that failed. Today, moved back up. So, you know, it's tough when you get out and it moves right back against you, but it's fine because that's what your plan was. And you know, more than likely, I would have said this would have continued down. So, you know, sometimes it goes right back against you and there's nothing you can do. Where would I look at this now? Well, now we have a potential fractal in place where we have this high, 2 lower highs to the left, 2 lower highs to the right. So to the upside, if we closed above this fractal high in the coming days, that would be interesting. And to the downside, if we close under the 50 and back over the 50, that would also be interesting to me. Yeah, this is a tough one. You know, we did have that nice bounce off the 100-day moving average. We did move up nicely today. We're back up above the 50-day moving average. But look at this, we're at 49.25 and we're right up against the 20-day moving average. So the 50 RSI and the 20-day moving average and the -1 ATR are all grouping right there. So I think I'm just going to let this one go. And we'll just see what happens. But you know, very likely it could just keep moving on up. But I don't like that there's this confluence of signals of sellers above me: the 20-day moving average, the 50 RSI, and the -1 ATR channel. Okay, gold. Did buy gold here when we had the 520 cross. It did gap up. I got out of half my position. If this would have closed underneath the 20, I would have just locked in everything, but it stayed above, and then the next day it went down. So This was unfortunate because it was a nice trade. It ended up being a break-even trade, even though it looks like, you know, we're way lower than where we bought it, but it's because we phased out. That's why I'm a big fan of phasing. So right now, nothing on gold. Google we talked about that. Close below the 200 is where I'll get out, or if we test the 50 moving average above. You know, Google really has gone sideways here, and the longer you have a stock move sideways, the more likely it's going to move strong one way or the other. We just don't know which way. So, you know, if it closes below the 200, I'm out, right? Goldman Sachs. Nothing too interesting on Goldman Sachs today. It hasn't triggered a fractal. At the very least, it'd have to close back above the 50 and all these moving averages, but then you have the 200-day moving average above you. So nothing really on that. I do like IBB here, and I'll tell you why. We have a bunch of things going on. We have a low, we have a rally, we make a lower low. Do you see how the MACD bar readings, see how shallow these are compared to how deep these are? So that shows me that even though we made a lower low, the momentum was much less than that first move down. That's a good, that's a double bottom with a bullish divergence. That's what Dr. Alexander Elder taught me. And true to form, making a lower low, we rallied. Not quite to the 50, got pretty close, and then we failed because the people that bought here, they sold here. That's what drove the price down. But the good news is the people that bought here, that sold here, now the people that bought here, these sellers are out of the equation because they sold here. So you don't have a lot of sellers left in the equation. So in a big context, that is very positive. But what else happened? We were strong enough not to go back down and test that low, and then we also moved, boom, right back above with a nice V2. Here's day 1, day 2, day 3. Day 2 takes out day 1. Day 3 looks like it's going to close above the day 1's close. The concern here is that we're at a 44.97 RSI. So where would my stop be? My stop would probably be, see, this is the washout bar. This day washed out day 1, and then day 3 confirmed day 1. I would probably use this as my a close below here as my stop. So that's a pretty far distance away. So in order to validate that and justify that, I'm going to have at least 2 times that risk to the upside. And I think it's possible. Either the downward sloping 50-day moving average or this previous high. So I do like this. It is under the 200-day. So I would, if I do take this, I would only take a half position. Just put them out there and we'll take a look. All right, so Intel did have a nice bounce. It was so oversold that it still hasn't even been able to close above the 30. The 30 RSI will act as some support above it. You know, a lot of times that 30 RSI acts as support underneath you, but now that it's under, it's going to act as support over. So nothing on Intel at the moment. The Russell 2000. You know, it's possible buying the Russell 2000 with a close above the 200-day moving average is valid long-term back-tested approach. So it's possible if it closed back above the 100, but I like some of these other ones better. All right. Okay, Coca-Cola did have a nice move up into a new range, closed back below. It looks like it's cashing some support in the $50 range here, but no trigger. I would have to wait for a close below and close back above a V1, V2 to get interested in Coca-Cola. Lockheed Martin did break out. It's holding that breakout to the upside now. That's positive. It's a 68 RSI. It's too high for me. MasterCard, it's moving up strongly. So Merck is interesting here, everyone, because yep, consumer staples are down today. It's more of a risk on type of a day. Where are we at right now? 215. Wow. 215 to the upside. All right. So Merck, a little while ago I spoke about stocks moving sideways, and the longer they move sideways, the more likely they're going to run one way or the other. That's the case with Merck. We really are moving sideways here. If we broke above this previous high here, which would be a fractal, 2 lower highs to the left, 2 lower highs to the right, if we broke back above there and also close above the 50 and also trigger that fractal, I might be interested in buying Merck to the upside if that happens, but it hasn't happened yet, so we'll keep our eye on it. Microsoft rallied strong, came back down, not doing much today. Currently the close is below the open, which is not super positive. Netflix, we're not really respecting this 100-day. We're closed below, we're back above, we close below, we close back above. So the market in Netflix seems to have lost its respect for the 10-day moving average. I'd like to see it go below the 10-day and then go up and never look back. So for me to get interested in this, my gut tells me if we could get down to this range, it would give us a good risk to reward ratio. If we move back above this previous high back here, which would create a fractal and put us into a new type of uptrend momentum, that would be the move on Netflix. Nike, well, we did have a V1 today, went below the previous day. Looks like it's closing back above the close. Did close back above the 100, which is also good, but the same thing with the 100-day moving average. It closed above. Oh no, I'm sorry, it went below. It didn't close below. This is a tough one. I think I'm going to let this one go. I think it would be safer to look for a dip buy down to here and or a confirmed move to the upside that takes out this fractal and the 50-day. Right here where it's at right now is a little range boundy. Philip Morris did test that previous highs, kind of moved down, nothing too interesting there. PayPal is range bound at the moment, has not participated very much in this rally today. The Qs, I would need to look for the Qs. To enter a Qs down in this range would probably be a really good idea. If we could get down into this range, the RSI would be in the low 30s, and whenever you can get a reading of a low 30 RSI, 30, 33 RSI at the same time, you're bumping into a major moving average below you as support. That's a nice confluence of signals. So that would be my move on the Qs. Or to the upside, a nice strong clean break over the 50-day moving average and the 50 RSI with some good volume would also be an option. All right, SLV is silver, which we have, and we're going to be keeping that until we have a close under 30 RSI or we move up and test the 50-day moving average. The SPY, we did buy this here yesterday at the close, exited at the open. I am going to be buying this again at the close of the market. So let me just write this down. It's important to write down what you're doing at the end of the day because, I try to get as close to the last second as possible. So if I don't have my ducks in a row and I don't have my numbers right in front of me, it's very easy to get scatterbrained and lose focus of what you're supposed to do and what the levels are. So we'll be buying SPY. In a bigger picture on SPY though, if we could close above this 50-day moving average and also the 50 RSI, that would be definitely a good technical sign. Okay, so I did buy AT&T here. When we had that crossover, we moved back above all the moving averages. MACD went positive, scaled out all the way up to here. It was a really nice trade. It did test the 70 RSI yesterday at some point and then reverse back under it, and so that was my signal today. So basically we bought here, phased out to about here, but it was a nice, wonderful trade. So at this point, I would like to look for a pullback to one of the moving averages, V1, V2, and that would be my entry point to go back up and test this high. Bonds came off a little bit today. Kind of the same thing as AT&T. I'd like to see bonds get back into the value zone. The value zone is between the 1 ATR channel and the negative 1 ATR channel, somewhere in this range, and then look for a V1, V2 entry back up. Tesla. Well, Tesla is down so far, and you can see it's a 2651 RSI, so it's probably going to find some resistance above with the 30 RSI above. It's probably going to run into resistance up there. So nothing on Tesla. UNG, nothing really there. Did gap down strongly today. Looks like it's not holding the 50 RSI yet, so nothing on UNG. Oil, did gap up. It seems to be holding this new higher range here. Looks like MACD is going positive. It's a 53 RSI. It's not bad. I mean, it's not bad, but energy select down here I like a little better in the same area. There's our Visa that we have. Is up a little bit today on our short, but not much, so I will be holding that until we have a close back above here. VIX down today. Did have a rally yesterday, but keep in mind this VIX had a big strong move above, and we're literally smack dab in the middle of the value zone. So I'm not 100% convinced that this volatility is over, because if you didn't know this was VIX and you just saw something else, you see a nice move, a rally, some profit taking, which is normal. It's holding the value zone right in here, so we very well might go back up and test that. So it's, be careful. Verizon, did buy Verizon right here back on the 16th of May when we moved back above this fractal and MACD went positive, and this was another great trade. Boom, 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 phased out all the way. It did test the 70 RSI and then close back below it, so that was my signal to exit. But yeah, I think that was a 3.5% trade in 2-3 days, which was nice. So we got both of those, Verizon and AT&T. So okay, so here's energy, XLE, and I do like this actually, folks, because this was the previous fractal. 2 lower highs to the left, 2 lower highs to the right. The fractal happened in the value zone, which means it's not too overbought, too oversold. Today we did trigger this fractal, close back above the 100-day moving average, and triggered this fractal, and MACD went positive. So this is under the 200-day, so I will be taking a 1/2 position on this. Where will my stop be? Probably a close back below the 100-day moving average. So just a nice tight stop on this. It's kind of close to the halfway of this bar, but yeah, probably a close below the 100-day would be my initial stop. Somewhere up in here would be my profit target. XLRE. So, back here we broke out into a new range, which is positive. Then we came right back into the old range, which is negative. That's a false breakout. Now we've attempted to rally, but look, it almost got, so this was previous resistance. When we got above it, it should have acted as support. Now that we're down below it, this now acts as resistance again. And you can see it attempted to rally, and it's got right back to resistance. I'm not going to short this, but my gut says to short it, just for the record, but I'm not going to short it. And then healthcare, did trigger a fractal today, but has these major moving averages above it, so nothing there. So let's go back and see what we have, what our possibilities are. Boeing would be a possibility with the close back above the 200. Canopy growth, on the weekly did come back, hold support. V2 under, back over, pretty strong volume. So I think I will be buying CGC today. Let's look at the weekly on that one. I'm going to let that one go. I don't like that big 50-day moving average above us. Facebook, nothing there. IBB, I do like because we have the double bottom with the bullish divergence, the rally up to the 50, the rejection of the 50, making a higher low with a nice V1, with a nice V2 on the upside. So I will be buying IBB. I'll be buying a half a position. IWM doesn't look like it's going to get there. Merck could get there. I guess we'll watch it. And energy I do like. So let's narrow those down. Don't think Boeing. So canopy growth. I like canopy growth for a full position. IBB I like for a half position. And 8 minutes there. So okay, so I've 3 positions is what I like. I like canopy growth with the full position. IBB I like with the half position because we're under the 200, and XLE I like with the half position because we're under the 200. And then our current positions, DDM looks fine. Google looks fine unless we get a close below. SLV looks fine. We're going to buy SPY. And Visa looks fine. So as far as the current positions we have, there's really nothing we need to get out. And so it looks like we'll be adding canopy with the full position. Let's take a look there. Okay. Tell you what, canopy growth, getting a little bit of a red flag feeling because of that 50 and those moving average. So I am going to buy it still, but I'm going to take it down to a half a position. I mean, this is all positive. It's nice V1, gives us a good, gives us a good risk to reward, nice legitimate setup. But we do have that 50 there, but it is up strong today, and it's decent volume even before the end of the day's close. So all right, so there are no positions that we have to get out of. Everything that we have is fine and profitable, except for Verizon, but it still hasn't. I'm not Verizon, Visa. So all right, so CGC, we're going to buy a half. IBB, we're going to buy half, and XLE, tell you what, I'm going to put XLE on the back burner unless it closes above this 20-day moving average and closes above this fractal. See, here's the fractal high. I don't always have to wait for it to close above the high, but at this point it has rejected that high and it has rejected the 20-day moving average, which is a little concerning to me. All right, so I'm going to go ahead and buy the half position in Canopy Growth.
Order partially filled.
All right, so I bought half position
Order
there.
Order partially filled.
44.93.
Order filled.
All right, so there's our position on Canopy Growth. That's simple CGC. Okay, so we are in CGC. I'm going to wait for energy to close back above there. And then IBB. IBB does look good. All right, I'm going to go ahead. And get the IBB.
Order filled. Order partially filled.
All right.
Order filled.
All right, so there's our entry on IBB. My stop is going to be a close back below this red line, so my profit target is going to have a little, have to give it a little bit more room to the upside there. All right, I gotta get the. All right, so that's out of the equation. What was that filled at? All right, 286.50. Be buying the 10% position size in SPY. Okay, looks like we're good. Have everything taken care of. IBB. All right. So we have CGC here at 44.93. DDM is fine. Google is fine. IBB we got here at 104.35. SLV is fine, keeping above. We got SPY here at 286.50, and Visa is going against a little bit, but anyway, another nice green day today. I'm really happy for that. Let's see. So the Dow is close to up 200, and we have all of our positions. Everything looks good. All right. So we have 30 seconds, and then after that, we will get to questions. So we got 15 seconds. Gold's rallying into the end here. And silver went break even on the day, which is nice. So,
Order cancelled.
all right, that's the market. Well, another nice green day. Really glad for that. Very happy that that happens and grateful for that. So, hey, before we get to the questions and answers, like always, I just want to let you know that I do offer private one-on-one teaching and coaching and mentoring sessions in the evening time via Skype. So, if you feel like that would be, if you need some help in your trading, you need someone to help you, kind of get your ducks in a row or design a trading program for you. That's what I do. I really enjoy teaching students. So, if you feel like that could help you, please let me know. Just write me on the email. It's located in the description of this video, and then my hourly rates are also in there as well. So if you think that would be helpful, reach out and, let's talk on the phone or via Skype and see if we can work something out. And then also, if you found today's live stream helpful, I would really appreciate it if you would hit the thumbs up button. That helps with our rankings in Google so that we can build this channel. So, or share it on social media or tell someone about it. And I would appreciate it. So, okay, those are my plugs. And let's take a look at some of the questions. All right. Etsy, good too, maybe 1/2. Yeah, I decided not to go Etsy with Bruce just because we were taking the other ones. Could I please get your thought on Groupon? Anybody know Groupon's symbol? GRPN. All right, who asked that? Oh, okay, Mount Doji. Well, I don't really like it that much. We have this downward sloping 100-day moving average here. That's kind of a big red flag. I feel like, when you get up to it, you're going to find resistance. And you can see, every single time it tried, it never was able to get above that 200-day. So going forward, until something changes, it's very likely that it will get stuck right there as well. It is positive that we move back above the 50-day moving average with a higher low in place. That's good, but I feel like it's going to be trapped somewhere in this range. So if it were me, would I be buying this? It is above a 51. It's above a 50 RSI as well, which is helpful. So all in all, decent, but I don't like it because of that 100-day or that 200-day moving average. XLF. So, it's good that we close below the 50-day moving average and then back above. We moved up for a couple days. We came back down. We tested the 50-day moving average, which is good. What's the high there? The high there is 27.21 and the high there is 27.19. So it didn't quite trigger a fractal, but we are above the 50 RSI, and are we above the 20-day moving average? Right at it. It's okay. It's okay. If it were me today, would I have bought this? I don't think so. One more day up, and that would make me feel like we're in a different type of trend. Right now, this still feels like a counter rally trend. If we could break strong with some volume, then it may come back initially, but that would give me better indication that we would kind of be able to move up. So right here, it's decent. It's decent. It's above the 50. It's above the 10-day. Being above the 10-day is good. MACD is not positive. I would give it one more day to get above all the moving averages if I were interested in XLF. Nike. I think we looked at Nike, right? Nike's not, it's not bad. It's it's mixed. It's not bad in that we have a higher low here. We close below, we close back above. If you use the 100-day as your stop, it's a good stop point, right? I mean, it gives you a small risk if you're wrong, and you do have a higher low, which is good. We've also come back up into the channel. On the negative side, we're at 45 RSI. It's a good chance that the 50 RSI might be your target to where it might find some resistance. But even then, the 50 RSI is probably up here and your stop is there. But, as you can see, I didn't buy it at the end of the day because I felt like there were many two conflicting signals. AMD. Yeah, again, it's positive. It's positive that we closed back above the 50-day moving average, but we really are range bound. Mount Doji, was it you that was telling me that you were buying calls on AMD yesterday? I can't remember now. It's pretty range bound, so I would be careful with that. But it is good that we close back above the 50 at the very least, and we close back above the 50 RSI. So that's decent. We do have a higher low in as well. And Bruce says, "Yay, weed for today. Maybe a double position just because. Oh no, only one half only. Always be prudent. Don't let your emotions take over, even if it is weed." That's right. I mean, it's true, guys. Don't let your mind has to be stronger than your emotions. I mean, that's a good way to put it. It's hard to fight those emotions that you have. You really have to separate your emotions from your mind and do what you're supposed to do. I know I say this every day. I apologize, but not really, because trading is not that hard, folks. But what is hard is managing your emotions and doing what you're supposed to do. It's the most important part of trading. I mean, there's no other more important thing than that. Exits, entries, all this other stuff. It's important, but it pales in comparison to being able to control yourself and trade to your plan. I'm going to say this every day, and maybe it will sink in, hopefully, because if it sinks in, that will be the best advice I can ever give you, and the best experience from this channel is if you can take that away. That will have the biggest effect on your trading. Frederick says, if my emergency stop exit a lot of my trades, is it lack of liquidity or wrong entry most of the time? Is that your 5% stop, Frederick? My guess, until you respond there, my guess is the type of stocks that you're trading are very volatile, or they have large bid-ask spreads, and not a lot of liquidity. Because I mean, if you're hitting an emergency stop on a regular basis, then the moves and percentage-wise in those stocks are just too big. I imagine they're smaller stocks, Fredericks. I have a feeling. I mean, just to put it into perspective, I don't think I've hit one emergency stop this entire year. Not that I won't in the future, but if you're hitting them on a regular basis, it's the type of stock that you're trading, my guess. Oh, Ramble Ron, that was you, okay, that was buying the calls on AMD, right? So you're buying calls, right? You're not selling them. Papper, I think you meant paper, maybe. So it was a paper trade. But anyway, when you're buying options, if you're buying calls, my best advice on that is, wait till the volatility calms down. Wait for something to really just move across so your options are cheap. Let's see. Frederick says yes, 5%. Yeah. If you're hitting a 5%, if you're hitting that on a regular basis, the volatility of those stocks is too large, in my opinion, and lack of liquidity would do that. Johnny knows we're a good show, Greg. Thanks. Yes, thank you, Johnny. Appreciate you coming by. Thanks. Nice to see you again. Visit us again. Oh, good, Ron. I'm glad. Paper account. Really good. I'm really glad. When I read that yesterday, I got a weird feeling about that. So, all right. Let's take a look real quick. All right. Why do you not trade only stocks whose are above the 200-day as it will? Why do you not trade only stocks who are above 200-day moving average as it will be a full position? Why do you not trade only stocks who are above two positions? So, I mean, I do trade stocks above the 200-day moving average in a full position. If they are under the 200-day, that's a red flag right off the bat if the stock is under the 200-day. But that doesn't mean you can't get good setups under the 200-day. So I kind of split the difference. And if I find a good setup that's under the 200-day moving average, then I will take it. But the splitting the difference part is only taking the half position. Because in a bigger general sense, setups under the 200-day moving average usually do not work as well as setups above the 200-day. It's kind of like in blackjack, right? Or in poker. If you have pocket aces, you're probably going to bet more than if you have, ace 10, right? Or ace 9. And that's really how I look at this. When the chart patterns look the best and I get the most setups, I make the largest bet. I take the largest position size for me. If it's, mediocre or not quite as good as pocket aces, then I still want to play the hand, but I'm going to go in with less. Oh, use a screener to find out only prices above 200. Yeah, I could do that. I think we talked about that before, but the watch list that I have, I like to be comfortable with the stocks that I'm trading. I don't like to just put in a screener and it say, hey, all these stocks are above the 200-day moving average. I only have 40 stocks, 41 stocks in my watch list. And, these are all large, well-known names. And as you guys know, I look at this every day. So I get a feeling for the personality of each particular stock, which I feel like is an advantage. If I just used a screener and it spit out something that I've never really seen before, I don't quite know the personality of that stock. So that's why I like to look at the same stocks over and over and over and over, so I can get the personality feel. Do you have a set watch list or do you change them often? This is pretty much my set watch list right now. David, I do switch them out. I do move them around sometimes. I think there was a time I didn't have Apple on there because it had just fallen off a cliff last quarter. And then sometimes, over the weekend, I'll look through like the S&P 100. That's kind of my large list is the S&P 100. And I'll go through that list. And if I'll just go through each one and I'll go, oh, this particular stock, maybe 3M or just pulling that out. But, I think that one looks pretty good. I mean, I know about a week ago, I took about 5 of the stocks in my watch list off just because they weren't performing. And I also felt like maybe there was some duplication of multiple stocks in the same industry. So yeah, it's an evolving process. I'll add some in, take some out, but my core, it's the core of the watch list, but some will come in, some will go out, but in general, the main ones stay the same. Does that answer your question, David? It's important to have a watch list, folks, that has a variety of stocks, large, well-known, legitimate stocks that have a lot of volume, that have a small bid-ask spread, that represent different industries and different business sectors. Not just all of these being healthcare stocks or all of these being tech stocks, because then you have too much correlation. All right. Any other questions before I head out in the rain and go up in the mountains? So anyway, we had a good day today. It's been 3 nice profitable days in a row, I'm proud to say. And we'll see what happens tomorrow. But I do want to thank everybody for coming by today. And I do appreciate you spending your time out of your day and doing this. I really do. Oh, David says, do you have a minimum cap size? You know, I basically pull the large stocks out of the S&P 100. You know, if I'm pulling from the S&P 100, usually everything is going to be a large cap size. But I don't really have a minimum because it's just not usually an issue with me, just because the stocks that I trade are just so large. I would say, though, that the amount of volume is probably more important than the cap size, so that you have some liquidity if you want to try to get out and the bid-ask spread's not too high. Don Robbins, what's up, Greg? Don has entered the room. Woot, woot. Hey, Donnie was one of my first my first students. Now he's a trading pro. How you doing, Don? About time you showed up in here. Frederick asks, I see. I thought traders do not fall in love with their stocks, as I read in different books, and change them often. Well, it's not that I'm in love with the stocks, Frederick, but I do like to understand the personality of each one. And you know, if you look at the stocks in my watch list, I mean, they're major stocks. You know, Microsoft, Netflix, Amazon, Apple. You know, these are the stocks that make the big moves. So that's right, doing well. So yeah, it's not that I fall in love with them. I just think they're the best stocks to trade, Frederick. I think they're the most liquid, best stocks to trade. Thanks, Don. Appreciate that. I'll pay you later. No, I'm kidding. Don was one of my best students. Boy, we'd do it, you know, we'd have lesson every night. So anyway, yeah, Frederick, it's not that I fall in love with them. It's just that I'm familiar with them, and I think they're just the best stocks to trade. So, all right. Well, everyone, thanks again. Yep, thank you, David. Oh, Ramble says, what do you think of AMD? Let's take a look. Well, it's very choppy, Ron. You know, we have held support here at the 50-day moving average, which is positive. We are back over the 50 RSI, which is positive, but we have these big bars above us. I think it's going to be difficult to move back up here. And also, MACD is not positive. I don't know. It depends when you ask, what do you think about AMD? I guess it depends what you're trying to do with it. But if the question is just to go long, I mean, you could. Remember, everything is risk to reward, right? So a close back below the 50-day moving average would be your stop. You do have higher lows underneath, which is positive. So, you know, if I were entering this trade, I would probably, you know, target the 70 RSI, which would probably put you somewhere up in here. So the risk small compared to the reward large. So yeah, I mean, in general, that looks good, but I'd like to see some more indicators. I'd like to see a confluence of indicators. Let's, you know, on the weekly, is there anything positive about the weekly? You know, it's holding. It's holding. I guess if we went back over here to the previous high, you know, this used to be the previous resistance. Now it becomes the support. So, you know, it's okay. It's okay. You know, if you bought it here and just to close below the 50, there's really nothing wrong with that. But I'd rather have the MACD positive as well. But Frederick says, okay, I'm going to change my watch list to bigger stocks. Thanks, Greg. Yeah, Frederick, I think it's going to help. I mean, you won't be buying as many shares, but it doesn't matter. You know, a lot of people get confused with that. They think they want to buy small stocks so they get a large amount of shares. But you're still buying the same amount of dollars, right? If you're buying $5,000 of Amazon, maybe you get 2-3 shares compared to buying, 10,000 shares of a really low price stock. You're still buying the same amount, and I'd rather buy the better company, but percentage wise, you're still going to do the same. And you're going to have you're going to have much better liquidity and not as much slippage on your bid ask spreads. On some of these small stocks, you can have a 10 or 15 cent spread between the bid and the ask. Lots of chop. Thanks. Have a good one. You too, Ron. Mount Doji says MACD and GCG. GCG? You mean CGC? Yeah, that's good, Frederick. If you're talking about Mount Doji, if you're talking about CGC, yes, but this is kind of a dip buy type of situation here. So MACD is going to be negative. Now, if MACD were positive, that would be great, but it's hard to get a real big, deep dip when MACD is negative. So we'll see. We'll see what happens with CGC. It did have a really nice, big, strong day today. But if I'm wrong, close back below here, we're out. CGC is what you meant. All right. All right, everybody. Well, thanks again for coming by. Like I said, I do appreciate you spending the time, taking, an hour out of your day to watch this. I hope it's helping. If you have any other questions, just let me know in the future. You're always welcome to write me on my email as well. And I will definitely get back with you and try to answer your questions. So with that said, I hope you have a good rest of your day, and I hope hope to see you guys back tomorrow on Wednesday during the last hour of the market. And if you haven't hit that thumbs up button, do me a favor, hit that. All right, everybody. Thanks again. Have a good rest of your day. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.